Hello, in this video I'm going to talk more about sustainable trading and how I define it and what I look for as part of the process for trading in a sustainable way. The first thing that I look at for sustainable trading is my budget. That is my first consideration. And I have a chart here with 4 different strategies, all of my winter strategies that we're going to go through and explain exactly how each of these strategies fit sustainable trading. The first and most important aspect of sustainable trading, as I said, is the budget. So, as you can see with this particular one, a maximum of 3 buys. Now, as you go through all of the time frames, you should see reasonably the same number of maximum purchases for each and every time frame. There should not be that much of a deviation. That is important because the principle you want to follow is that your trading paradigm needs to be consistent at all levels. And as you can see, this particular one really is. And that is how you determine the first step of a sustainable recipe. You want to always make sure that your risks are mitigated as much as possible, and you want to take care of the long-term situations. So, for example, if we go to the 1-hour chart and we backtrack to Black Thursday or the February-March crash, you can see exactly how this particular recipe will manage that process. And that is the point. It's consistent. It manages sharp and severe drops in the market by mitigating through the process. It's not meant to be a lightning fast process. It's meant to be a consistent process. Now this is the MACD Parabolic SAR winter recipe. Let's go to one of the other windows. This is my ATR momentum recipe. It is fall winterish. It's a little more aggressive than what might be expected. Let's put this back at 1 minute. Let's put this at 1 hour. And you'll see the goal is to mitigate risk. So if we go to the end and we zoom in, this one, as I said, autumn wintry. It's a little more aggressive, but it's still very consistent. It's very constrained and tightly controlled. That is what you want. That is part of being sustainable. So even at 208 days, it has only consumed $130 to $150. That sustainability is what makes it profitable. Now, is it going to be the best process for a given coin? Yes or no? That really depends upon your risk assessment. Is it a reasonably stable process? Yes, it is. And that is the beauty of looking at these kinds of metrics. So you want to be able to take a good look at how you can sustain your budget even in the worst case scenario. So we're in the Black Thursday area, and you can see the severe market drop. Here it is right here, and you can see exactly how the process did. It did well. So let's go with the next process, the MACD RSI combination. This is more of a deep winter combination, but it's designed to be very unique. Notice it's very much above the profit margin, but yet it has not given a sell signal yet. It has only done 2 purchases. So this is a situation where you can monitor it, use a trailing stop loss that's aggressive, like a 2% arming and a 1% retracement, to try to really get these unusual high peaks. And that is the point with some of these more advanced strategies. Not necessarily to get in and out right away, but to be more articulative of the profits, to find an opportunity that makes the best sense. For example, this one's had multiple chances to generate a sell signal with a very good profit, but the algorithm says not quite yet. So it does a very good job at really looking at the market, even with Black Thursday. So let's go back to the March, April, May. And as you can see with this particular coin, Black Thursday really didn't have any major impact. This particular coin didn't feel it. Here is the brunt of the transition. From the longer term picture, this particular recipe was completely unaffected. With only 2 positions, you could easily put $1,000 on each position and simply wait it out. So one of the worst crashes in crypto history, and this particular recipe did exceptionally well. While everyone else was panicking, it simply waited for opportunity. And opportunity first came right here. Now, if you were lucky enough to get way up here, then you got a bigger, more genuine opportunity. Now, the last recipe, what I consider permafrost or glacial. This is a brutally slow and efficient process. It doesn't do rapid trades. It does only trades that have purpose. As you can see, it doesn't even move quickly. And here, this particular trade, look at the profit margin. Simple, simplistic, and thorough. Now let's go to the 1 hour mark, and again, look at a wealth of possibility here literally just sitting there waiting for the strategy to decide when to take the profit. During the Black Thursday crash, you see it here, right in the beginning, you could have manually simply taken a profit and walked away from the whole mess. So another good, solid recipe that went through one of the worst market crashes in crypto history, and yet it did exceptionally well. And that is the point. It isn't affected by a lot of different items. So when you're looking at your recipes, all of these are sustainable. All of them will handle rapid and difficult market situations. And it doesn't matter what time frame you use, because they all maintain consistency through every single time frame. And that is the important part. So when you look at the profits, this is all I care about, right here. The rest of this is, in my opinion, meaningless. This is what I care about, and this is what tells me whether or not I should go to a paper trader. So right here, let's look at the numbers. Now this tells me this coin hasn't developed enough information at this time frame. So let's go to another time frame. And even with this one, not enough information. Let's zoom this in. Momentum, MACD, RSI. A very defensive process. Very slow, very meticulous, and very cautious. And one that just does a good job. Look at the profit boundary on the 15-minute mark using $11 positions. And it's only using a maximum of 2 positions. So for $20 of exposure, it pulled in $3.54. 20, so I figure $4, 1/5 of the total exposure became profits. That's a pretty good risk-reward ratio. It takes a little bit to build, but it's worth it. And that's the point. Sustainability, long-term consistency, short-term behavior. Each one of these recipes offers something that makes it stand out. Whether it's an autumn wintry, as this one, a glacial or permafrost as this one, a winter as this one, or a deep winter. They each work well based upon a given coin. And even the most difficult coins become profitable with this kind of a situation. So let's start by picking a coin that has a notoriously difficult history. A coin that can be very cumbersome to work with. XRP is one of those coins. As you can see, it's not really a short-term performer. But as you go up to a higher time frame, you begin to see where it can benefit. It's meticulous. It's precise. And that is the point. It's designed to work through the market no matter what happens. Even a coin as difficult as XRP is profitable in a multitude of ways. Take time to look at the sustainability of your trades. Remember, if you have coins that don't use as much of a budget, then you have a situation where you can trade more coins. And that can help you get better profits by diversification. Sometimes a strong summer trading recipe can work well, but most of the time, in all honesty, it doesn't work well. The market is just often too volatile for a system that isn't capable of dealing with some of the longer term situations. In this case, XRP, notoriously difficult, notoriously side-channeled, and all four of these recipes do exceptionally well. Let's look at another coin. A coin I generally like. I believe what they represent, but I hate trading them because it is just a very difficult coin to work with. Nano has a wonderful concept, but as you can see, it can be tremendously complex to work through. But even still, yet again, all of these different approaches work well. And it's just a matter of picking the approach that fits best with your risk assessment. Let's go pick another coin that is a double-edged sword. I dealt with this coin a lot, and I can tell you from personal experience, when it drops, it's a nightmare. And that's Raven. This coin is extremely hard on accumulation. It is a very hellish coin because under the right conditions, it can easily require 100 positions to recover. And yet, with each of these recipes, it does well. So all four of these recipes can pretty much trade any coin on the market and have a very good success rate. And that is what makes all of them sustainable. That is what will bring every single coin in this case to a viable, profitable solution. Even coins that are notorious for their behavior and volatility and instability become manageable with this process. And say some of them can do very well if your risk assessment can handle it. And yet, as you can see, not very much exposure. So for a $20 maximum exposure, it's been able to bring in over 50% profit. That is an exceptional trading paradigm. For the more cautious, again, a fall wintry, kind of a good mix, but it's still cautious, it's still good, it still works well. And it requires $40 of exposure. So 25% profit for this. Not bad. Let's get into the deep winter with the RSI. And as you can see, this particular coin doesn't produce solid results right away at this time frame. So let's move up a time frame. Even here, the coin has not produced yet. So this particular coin doesn't work well with this recipe because it's very cautious and the coin doesn't have good characteristics. But in each and every case, patience and vigilance will reward you simply because the exposure for this coin is extremely limited, and that is its best selling point. And even this coin, extremely limited exposure, and yet it does well. Do not underestimate sustainable long-term trading on a large number of coins where you have a very limited exposure. You will do better in the long run. All of this is non-leveraged, standard spot trading. No gimmicks, no shenanigans, nothing that would jeopardize your portfolio. And all of four of these are something that you could leave running for a extended period of time, like 2 weeks, without checking. Come back and feel completely comfortable that your portfolio is safe. That is the biggest standpoint that you need to have for sustainability. And that is the reality that you can't watch this thing 24 hours a day. You can't sit here, hover over it, trying to make decisions on whether or not you should get out. You can let them do it for you. Now, I will put this link in the description of this video. I encourage you to test, analyze, and watch carefully each of these situations. This is how you protect your portfolio for the long term. For North America, the winter season is coming. That means the stock market will slow down. We are in an election year. That means it's going to be more volatile and unpredictable. Take this opportunity to reevaluate your risks. Pick a situation and a recipe that will mitigate your risks. Focus on more than one coin. Focus on the good quality coins, but also with these kind of recipes that have additional defensiveness, like this one. Focus on coins that are above 500 billion market cap. Or 500 million market cap. I would use this one over 1 billion. In fact, I would use any of these. From 1 billion or 500 million, I would even consider coins as low as 100 million. Coins that don't have a good history. Normally. Let's face it, this coin has wrecked innumerable amounts of portfolios. Dash is a nightmare. But with only 2 positions at risk with this kind of a situation, as you can see, it does well. Even it can become profitable with this kind of a recipe. So one of these recipes will work well. But if you use all 4 of them on a platform that lets you split your funds, you can literally split the difference and get the best of all worlds. For example, if you have a Binance account that allows sub-accounts, you can literally set up different sub-accounts and trade the same coin on 4 different recipes and literally get maximum benefit with the most defensive posture possible. This is how you protect yourself in a sharp market downturn. If you decide to just pick one coin, $1,000 can easily be trading 50 to 70 different coins, depending upon your maximum buy amount when you look at every single time frame. So you have some very good resources to help you prepare for long-term market volatility. Take advantage of them. Take the time to protect your portfolio and really evaluate your risks. Don't get caught off guard with a Black Thursday. Smart traders don't fear Black Thursday because they know no matter what, the decisions they make are based solely on the mathematics. And as you can see in each and every one of these cases, the mathematics always give good results. Be smart, be wise, trade safely, trade sustainably. Until next time.